Good morning from Los Angeles and good afternoon to the East Coast people. Welcome to Trading with Sergio, Wednesday edition, Fed Day, big day. I started half hour late today. Some of you are wondering why it's not at 10. I wanted to go through the Fed decision and potentially listen to Jay Powell's last news conference because he will be gone as of next May, I think. But Trump quasi announced who the next Fed chief is going to be. In fact, today at noon, I have a video coming out with my opinion. We'll talk a little bit about it today before before the Fed decision comes out. The likelihood of a quarter point cut, an additional quarter point cut, which all started last September with a 50 point cut, 50 basis point cut. I think we're going to be at 125 or 150 basis points since last September. And we'll go through TLT, what TLT has done since the Fed started cutting rates. Why is the Fed cutting rates is the big question, right? While we have all asset classes at all-time highs, with the exception of crypto, we have real estate, although struggling, but in all-time highs, gold almost all-time highs, silver all-time highs, stock market all-time highs, or within 1%. I've never seen Fed cut rates when all asset classes are at all-time highs. A lot of people are expecting a melt-up. They've been expecting a melt-up every single time the Fed cuts. Look, there is a saying, don't fight the Fed. That one I agree with. But I think a lot of people are overestimating the power of rate cuts. As long as the rate cuts do not present themselves into the consumer's hands, it's not going to make a difference. And actually, it hasn't. Since the Fed cut the rates, the Fed funds rate, which is the short end of the curve, where the Fed is very powerful, they can do whatever the heck they want, but they can't control the long end. And with what's going on, I had a video come out Monday about the carry trade potential problems with Japanese interest rates shooting, literally going parabolic now. What's going to happen with the carry trade? You guys please go check that video out. It explains pretty much everything. I have another one coming out on Friday about the carry trade because I think we need to pay attention to it. Why is the Fed cutting rates, right? So have mortgages, let's say, housing affordability is in the toilet. It's been in the toilet because the prices keep going up, because asset classes keep going up, obviously, and it's a inflation hedge almost, and nobody can afford a house. I mean, I personally couldn't afford the house that I'm living in, where you see my backyard back there. I couldn't afford it today. There's no doubt I couldn't. So all I'm saying is, we have to look into a little bit deeper than just, oh yeah, if I cut rates, markets goes up. No, not directly, or not instantaneously anyway. But over a year period, when the Fed keeps cutting rates, yeah, that's true. Asset classes do better. Hence, don't fight the Fed. What happens day to day, like today, let's say, what happens? I'll put up the 2-minute chart and we'll see the volatility that's going to be coming into the market. More than the cut, which is 90% expected, is what the Fed says. And if there are any hints of why they're cutting rates, I've never seen Fed cut rates unless the economy is in trouble. If the economy, I look at Fed as the gas pedal and the brake pedal of the economy. They can do certain things to push the economy out of a slump, and they can do certain things to slow the economy down if it gets overheated, just like they did during the transition from ZERP to raising interest rates very quickly. That was the quickest pace in the history of raising rates from 0 to 5. And we know what happened to the equities between 21 and 2022. It was pretty tough. So, but the market itself at the moment is not paying any attention to slowdown. Forget our word, recession. None of that is in play. None of the markets, actually, right? So, okay, then why is the Fed cutting rates? Well, Fed must be seeing something to cut rates. I don't think they're doing it because Trump is jawboning them and bending their wrist and saying, "Hey, you have to cut rates." Cutting rates I mean, my lifetime that I've been involved in these markets has only happened when the economy seems like it's slowing down. It's like a preemptive strike, right? And so we'll see. We'll see what Jay Powell says. We'll see how the news conference goes. I'll probably go live and listen to it with you guys if you guys are interested. Before I do that, let me post a link if anybody wants to come on and talk about anything. You're more than welcome to do so. Here is the link. All I ask is you're in a quiet place with good internet reception so we don't get cut off. We can talk about anything you guys want. I'll go through the positions real quick. The decision is at 11 a.m., so we'll wait. My overview of all the macro data that I'm seeing, right? I mean, you can get this yourself. I've been saying this for a year since I started the channel. You can go to Federal Reserve economic data, and it's all there. If you believe the data, which I have no reason not to believe it, credit card defaults are going through the roof. Auto loan defaults are going through the roof. Prime and subprime, by the way. Mortgage defaults are ticking up. Unemployment's ticking up. So that's why the Fed is probably cutting rates. But Fed cutting rates does not mean the consumer is going to breathe easier. Consumer has been dealing with inflation and increased prices on everything pretty much. But I think there's a bigger picture, a bigger play here. The video that's going to come out at noon today will explain that, but I'll just go into it a little bit. Obviously, the Trump administration would like lower interest rates to start, light a fire in housing again, because affordability, as I said, is in the toilet. For example, a 35-year-old couple, college-educated couple with 2 decent jobs cannot even afford a starter home these days. That's because asset classes have gone through the roof due to the print and spend attitude that we have. However, how do we bring mortgage rates down, right? Because Fed can cut the short end of the curve, but short end of the curve does not dictate mortgage rates. 10-year, 20-year, 10-year, bonds. I mean, 10-year notes or 10 and the 20-year bond is what you need to watch. Fed cutting rates does not, have any effect on your credit card balance, debt, or interest rates. So again, Fed can manipulate the short end of the curve, but they cannot do much about the long end, and it's pretty evident of what's happening around the globe, right? German bond rates are skyrocketing. Japan is just a disaster. We talked about that, and then go watch the video that's going to come out on Friday. Why is that happening? Well, all these countries are, print and spend countries. So Japan's debt to GDP 230%. It dwarfs ours, which I think I'm quite unhappy with, which is about 130%. So I think the Trump administration has the playbook. The playbook is, it's pretty evident we're not going to be able to cut the deficit. Okay, we're going to keep printing and spending. Okay, well, if we can't cut the deficit, how do we lower the debt to GDP? Because honestly, if we were to go fiscal responsibility and then cut the deficit, I think the markets will tank because there is no more pump, right? There is no more money. There's M2 growth will slow down, in fact, go backwards. In fact, if you do watch, go to Fred again and see what's happening to the Fed balance sheet, it had ballooned up to about $8.5 trillion. First, by the way, Fed is not supposed to hold anything in their books, but then, that game keeps getting changed. It went up to $8.5 trillion after the pandemic because they had to save the economy, right? Okay. They literally printed 7-8 trillion and pumped it into the economy, and they bought back all the bonds and they bought back all the mortgage-backed bonds just to keep rates at zero. Okay. Well, that's down to about six trillion now. So they've been reducing the balance sheet for quite a while now, and actually they've done a good job reducing the balance sheet because now we have some bullets to shoot if the economy is going to fall off the cliff. And if you look at all the data, since we're 80% consumer-centric GDP, right? If the consumer spending slows down, economy slows down, period. Consumer spending slows down, or we may go into a recession. But the Trump administration has different ideas. Their idea is, let's control the Fed. So today's video's title, I'll give that up, is Fed is losing its independence. If you believed they were independent to start with, they were not politically, they were not politically aligned with the administrations that is in charge. But there's going to be a massive shift coming up in the Fed. Okay, so it looks like Hessett is going to be the next Fed chief. Well, that is a direct line now between the White House and the Fed. You know, whatever Trump administration says or Scott Bessent says, as the Treasury Secretary, they're going to listen to him, right? And then all the Fed governors that are coming in. So if the Fed is losing its independence, which I don't like actually, but it seems like all the indicators are pointing that direction. If the Fed loses its independence, and basically the White House and the Fed are one, obviously they're going to try to lower interest rates. So Trump administration's goal in this, and I think midterm elections are coming up and they don't have time. They're running out of time. And we know what happened in Miami now. Not that it's a big deal, but all the mayoral elections like New York City, Miami, big cities, they're all going Democrat. And they have to be careful about that, not to lose the midterm elections. So my thing is we may have in the my New Year's predictions I'm not going to do anything until last week of December this year, but first couple of months of the year may be a little tough when it comes to markets, but then I think the pumps are just going to be turned on double time. Because they cannot afford to lose the midterm elections. At the moment, the way it looks, they will lose the midterm elections because the economy is struggling. The average American is struggling. They're, over their eyeballs in debt. And so connecting that is, if the Fed loses its independence, the White House becomes the Fed, right? What are we going to do? We're going to keep pumping. We're going to keep spending. And Trump administration's goal is deregulate, right? Drill, baby, drill. Grow the GDP somehow. That's how they want to lower the debt to GDP ratio of 130+%, because in another 40 days, I think we're going to hit 39 trillion in national debt. So if we're going to give up on the one side of the equation, because debt to GDP is, our debt is about, as we know, 38.5 trillion. Our GDP is about 30 trillion, 29 trillion. Okay. So if we can, Elon tried for 3 months to cut it. It didn't work out. He quit, left. I never thought it would work, the Doge thing that they were trying to do. Government's just too big to just go in there and nitpick and, be fiscally responsible. While bad fiscal policies, obviously, is followed by bad monetary policies. So what are we looking at here? Now we're looking at White House dictating interest rates, White House dictating how much money we print and spend. And if we can move GDP up to 32, 34, 35 trillion, right, then the debt GDP will shrink. But then since we're consumer oriented or consumer spending economy, consumer is stretched out, default rates are going up. There's some of the numbers are close to 2008 levels, folks. So just go check Fred. Don't take my word for it. Federal Reserve Economic Data. It's a free website. So if you look at all these variables, seems like the economy slowed down. That's why the Fed is cutting rates. They're seeing trouble ahead, as opposed to, let's just cut rates because Trump said so. I don't think it's that. So we're going to find out. And if you do look at the rate cutting cycles, by the way, I have a video on the channel about that with pictures of going back all the rate cutting cycles that we had. Actually, the markets don't do well during rate cutting cycles because the market says, okay, why are they cutting the rates? Are they cutting the rates because the economy is slowing down? And as expensive as the indexes are, according to some people, they're very expensive. Obviously, Warren Buffett says so. Case-Shiller index is pointing bright red, right? A lot of indicators are pointing that the market's overvalued. Some people look at PE ratios, forward PE ratios, although S&P 500 earnings this last quarter, about 80+% of the companies beat their earnings, right? So we're supposed to earn this year anyway about $270 a share on the S&P 500, and at 7,000, where does that put us? About 25. 25 is historically high, obviously, if you're looking at PE, but I don't think anybody looks at PE anymore. So, but anyway, so that's the game plan for the Trump administration, right? Grow GDP and have rising tide lift all boats. Well, that's not happening, right? The wealth gap is as large as ever in this country. Again, I'm a full-on capitalist. I have zero regard for socialism, but I mean, you got to be a fair capitalist at some point, and the middle class is suffering in the U.S., right? The top 10% own 87% of the assets. And here's a good segue. That's why I created my website. My 12th, actually, blog article or newsletter went out. Please go subscribe, www.sergioavedian.com. I'm trying to improve financial literacy, because the only way the wealth gap is going to come closer or come down, actually, or get narrower, is by financial literacy, because we don't teach anybody anything in this country, right? We give them an iPhone every 3 years on payments, and an 80-inch TV, and say, go watch Super Bowl and have fun with it. I mean, that's not it. We need to teach this stuff. We need to teach long-term investing. We need to teach how to combat the debasing of the currency. We need to teach how to combat, losing buying power every single year. Because on that front, I said this before, I think government's gaslighting big time, right? Inflation is not 2-3%. It's a lot higher than that. So with all that said, I'll go to the positions real quick. The decision is about 14 minutes. And I think J Powell starts about 15 minutes or 20 minutes after that. And we'll see. We'll see if I stay through it. So please put up all your questions. If anybody wants to come on, the link is up there. Grab it and come on. I don't day trade, so to me, it's not going to make any difference. I've been keeping the same positions. I adjusted some of the positions on BMNU. When I go through it, you'll see it. It looks, I have 7 days to go. It's trading days. It looks like I will get called away if everything ended up here, and it'll turn into a wonderful, amazing trade. If it doesn't, then I'll keep it and then continue with what I need to do with BMNU and some other positions. Okay, we have Roy just joined, so let's put him on. So good morning. Hey, what's up?
Hey, hello, how are you?
Good, sir. How are you?
I'm good, I'm good. Honestly, I wanted to write a question, but I thought that it's easier to share it with you directly. So
Okay,
it's
everything
more about
froze. Well,
with the volatility that we have, currently in the market, and everyone is saying we have the bubble of AI, the Bitcoin up and down. No one knows what to invest in, and I don't know, like even sometimes you share that it's a good idea for long term to just invest in SAP 500. So just keep it up because it has
yeah.
been on average like 10%. But if someone has a plan for the next 3 years, so and I think within those 3 years we'll get some big hit. This is what everyone is expecting. So it could drop
Nobody knows.
dramatically. Yeah, no
Nobody
one
knows.
knows. So I don't know if investing is an option now. I mean, like in the stock market, or we should search for some alternatives. Even with your huge experience, sure, you got some hits also during the last period I was following. So, what is the best choice in this really kind of weird economy?
Well, we got to invest first of all, right? You have to have 2 separate books that you run. One is going to be an investing account. Investing over long periods of time always beats active investing. Passive investing, especially if time is on your side, you cannot deny the power of compounding. Okay, you need to invest in order to keep pace with what's going on in the country. So, for example, this year the dollar lost about 8% of its buying power. You can look at the dollar index and see that the market's up 15%. Okay, you take that out, you have net 7% return for yourself. One must invest. Yeah, I could not care less about what the market does. People ask me the same question a lot. Oh, Serge, market's so high. I'm like, okay. I mean, my answer to all of them is, if you bought the absolute top in 1987 crash, okay, after that we know what happened. If
Mhm.
you bought the absolute top in 2000 dot-com bubble, absolute top tick,
Yeah.
then if you bought the absolute top before the pandemic, if you bought the absolute top, again, top tick before the 2008 GFC, okay, you'd still be so far ahead just by buying and holding.
Yeah,
And then
definitely.
and then you have trading, That's why I have multiple accounts. I don't mix pleasure with business. Business is investing, creating long-term wealth. Pleasure is trading and trying to get asymmetric returns. How do you do that? You got to take risk.
Yeah,
And once you take asymmetric risk, you can get 100% years, beat the benchmark by 5x, 8x, whatever, or you can lose. But long periods of investing, you can do this calculation yourself. Figure every single top from 87 all the way to the April top. You're so far ahead by dollar cost averaging and passive investing that I could not disagree with the people who say, yeah, it's this, it's that. And then I'll finish with this on this topic is my mentor said time spent in the markets beats time spent timing the market. Period.
I
Okay.
see. Great. Yeah, that's it for me. Thanks
Yeah,
for.
thanks for joining, and then we'll watch the Fed decision together. Again, I think the most important thing here, okay, he took off. Here is figure out why the Fed is cutting the rates. That's about it. And once you figure that out, again, short term is short term, short term. I mean, there are a lot of people who day trade, do this, do that. I'm like, whatever. Hey, Doug. Yeah, something interesting is happening. Yeah. All right. Non-farm payrolls, unemployment rate data, jobs data, CPA, PCE, GDPs, E1 financial account, okay. No, I don't think it's done intentionally, but then all that data, honestly, I still cannot understand how we can run a $30 trillion economy with BLS data. There are outlets, private, by the way, Wall Street doesn't look at any of that data because whatever they bring out next month is revised. The revisions are massive. So I don't think Wall Street runs or a lot of hedge funds, run on that data. They get their private data, obviously, but one of the best ones that I've seen as far as unemployment, let's say, is ADP live data. It's public info. They are so far ahead of the BLS when it comes to all this data, right? I don't think it's intentional. I mean, the government shutdown obviously had a reason for all this for 40 days or whatever it was cut down. I don't really pay too much attention to conspiracy theories and things like that. Look, a lot of people do pay attention. I think they're just losing time. All I'm looking at is I put my head down, I create my thesis based on facts, structure my trades. I know my long-term investment account. I just look at be in a basket of stocks, 5 stocks max, with proper allocation and try to do well. That's all I'm looking at. I mean, I draw my own conclusions with all the data because we can look at data. You and I can look at all the stuff: CPI, PPE, GDP, jolts, unemployment, all that stuff. We can look at it and then draw different conclusions. But again, market will draw its own conclusions, and then you just go with the flow because the price takes precedence for me. What I see is in front of me is the price. I can have an opinion about that price that it's too high, it's too low, it's this, it's that. That's why we have a market. Markets function perfectly, beautifully, because at that instant second that you're trying to buy something, somebody is willing to sell it to you with a diametrically opposite opinion of you. So that's why markets are beautiful, that's why we have markets. So no, I don't think it's intentional. I mean, I honestly don't pay too much attention to the BLS data that they bring out with all these indicators because it gets revised. Yes, markets move short term, maybe for a few hours or a day or two, but then it finds balance and then it just comes back and does what it needs to do. Happy Wednesday, sir. Happy Wednesday. So, all right, let me go real quick to the positions, and then I'll go to CNBC. I have CNBC muted. Usually I don't watch them, but hey, it is what it is. And we'll introduce a little bit of volatility here, I'm pretty sure, the next few minutes. All right, so SPY, not much going on there. Let's go to the positions real quick. All right, we have 750 leaps now on ASST going out to January 2027. I have 450 of the January 2.5s and 300 of the 5s. BMNU, this position is turning into a beauty. So I had sold naked strangles got assigned the shares, and so cover calls and more naked strangles, covered the naked strangles with profits. Now I'm just covered with just short 8 puts, and I'm covered with my cost basis is 778 and stock is 11. I put out 8, 9, 10, 11 calls against the shares. That's exactly at 1104, and it looks like I get called away and then have a wonderful return. I'm long 5,000 shares of Blaze AI with cover calls of the 3s expiring on the 19th. Average cost 243, stocks 241. I am long some. I was long 150 neo calls. I took profits. Now I'm only long 75. Average cost 35. They're 40 cents. I sold them at like 48 to 50 cents a couple days ago. But I went and sold weekly 5.5s against my 5s. Took in a nickel. All those nickels, when you're dealing with 30, 40 cent options, makes a huge difference. They're down to nothing almost. So, yeah. Once they expire, then if we get a pop, I'll take the profit. And I'm long 220 now. SPET January, 15 calls. If we get a move in Bitcoin, this will print massively, but then we'll see. We'll see what happens. It's a directional bet. This also started with a put credit spread called debit spread kind of a thing, but then it evolved into just long options now. I have been selling weeklies against him for 2, 3, 4, 5 cents and been lowering the cost basis. So we'll see. We're just looking for a big pop in Ethereum. And this is the SPY. Let's go to CNBC real quick. Hopefully my favorite Jim Cramer is not there. And there we go. There's the daily chart of SPX, basically going sideways for the last 7 days, really. 1% from all-time high. Here's TLT. This is the inverse indicator of the 20-year bond. So if TLT is going up, rates are going down. If TLT is going down, rates are going up. This goes back to December, but if I were to point to you guys where TLT was when the Fed started cutting rates versus where it is now, and why the mortgage rates have not come down, you guys will understand what I've been talking about. So this is the 3-year TLT. This is September of last year, right here where I'm pointing. TLT was about 101. Today we're at 80, 88, right? So interest rates actually have gone up because TLT goes down, interest rates are going up. It's an inverse indicator, inverse trade. Yeah, Fed has cut the rates by 150 basis points and rates have not come down. So yeah, and why is that? Well, that's because the long bond people, folks, bond vigilantes, see what's happening with the 38 trillion in debt, and they're not buying any of this. So, but then if Fed loses its independence and then they run the Fed, White House runs the Fed, then other things may happen. But then it kind of proves my theory that they have to print and spend massively. This Japanese thing, everybody needs to watch closely and please understand what it's doing. Liquidity has been drained. It's not drained yet, but it's done now because you can't do a carry trade now because Japanese rates are shooting higher. But will it force unwind? And Japan owns about $3 trillion in U.S. assets, by the way. If they're forced to unwind, we could have some nasty things happening. But as the Fed being the buyer of last resort, I think they will step up and turn on the printing machines and then save everything else. Save Japan again. So we're 1 minute away from the Fed decision, and I'm going to shut up and we'll watch it together. January 28th meeting, first one of next year. Where do you land the next possible cut?
on the next bottom, and it's going to be all dependent on what happens in the labor market. The labor market is really the key messaging for the Fed. The Fed has to be careful, though, right? It doesn't want to walk into a policy mistake by being either too hawkish or too dovish.
All right.
The path of least resistance right now.
Let's put that up front so we all can see the 2-minute chart. So the 2-minute chart already, the algo news reading algos are pumping it, but this is what happens every time, and then they'll sell it off, and we'll settle where we're going to settle. More important thing here is going to be, see, the news reading algos already have read it already. Look at that. Look at that wick. Look at that move we're getting up. Look at that. All right. Okay. So, and then I'll bet you it'll settle down. Depends what that's a huge move that we just got. Huge. Huge move. 3 descents. And then now we're going to balance and come down. So this happens every time. Big cloud of dust. At the end of the day, we settle where we started.
To recap, the vote was 9 for cutting a quarter, 2 against cutting, 1 for cutting 50 basis points. The Fed signaled a higher bar for the next cut, using language that it's used in the past to do so, saying that it will assess incoming data to determine the extent and timing of future rate moves. That language was used in last December to signal a pause. The rate outlook suggests consensus for just one more cut next year and one more in 2027. But as I want to talk about the dot plot, a lot of disagreement. Before the dot plot, though, I want to talk about some pretty big news when it comes to the balance sheet. The committee making a determination is now at what it calls an ample level of reserves. So it plans to initiate purchases of shorter-term treasuries on an ongoing basis. And a separate document was specific, saying the Fed will begin buying $40 billion in bills starting December 12th. That's just a couple of days ago.
Yeah, injecting liquidity. Bills, though. Is that the start of QE? I don't know. We'll find out. See, they're cutting rates and saying everything is fine. GDP is fine. It's going to be stronger. Why are we cutting rates? Down to 2.5%. So the mandate is thrown out. No more 2% full employment. Now we're accepting 2.5%, which is not 2.5%, which is a lot more than that.
Just a note, the statement no longer says that the unemployment rate is low at the current rate.
Okay. So now we're just selling off, and we're exactly where all this started from. I mean, this is every single time this happens. Let's see what Ethereum is doing. Yeah, it's just selling off now, hard. Let's see. Yep, Bitcoin selling off. Dollar index. Dollar is selling off. Everything is selling off now. This is SPX. This is the normal expected volatility. And now everything is back to exactly where the decision came from. It's not QE, but it's kind of quasi QE. Yep.
You know, Brian, people are going to take off on this, and I don't want to stop the craziness that will happen.
Them buying the bills is definitely going to put lower pressure on, for the rates to go down on the short end of the curve. Like I said, they cannot control the long end of the curve. They can control the short end. Son of QE, QE light. Now we're going to hear this from CNBC clowns for a week or so. That was the key word. Ample level of reserves. Not to worry. We're here with open hands. We're going to pump. If they go out to 3 years. Okay. Yeah, short end. That's all they can do. They cannot do anything to the long end. And moving the short end is not going to help the consumer. Yeah. QE light. Let's call it QE light. And then we're exactly back to where we started, honestly. exactly where it all started, and then that's what happened. You get like 1 week of volatility or 1 bar, and so we'll just put it on mute, CNBC, because whatever. Oh, I like Rick.
My issue is simple. Every crisis, they expand the balance sheet by buying securities to manage rates or manipulate rates. Pick any M word you want. But in the end, this is something to really pay attention to. And finally, the markets themselves, we saw a couple of basis point drop pretty much across the whole curve. 350 356 in a 2-year. 10s were hovering right around that 460.
Everything's back to where it was.
About a few basis points to 13 and change. They're right back to 415. What's notable is where we were this morning, as Brian pointed out, the fact that we're toying with 420. Remember, we closed at 457 last year. We're getting ever close to unchanged on the year. On the year, analysts were spending a boatload of time under 4%. We've had a total of.
It's not going to happen because inflation is not going anywhere. Okay. It
seems to have lost its hunt for 100 recently, but that makes sense considering the Fed's easing. And finally, the next meeting, January. Many are talking about the January 28th meeting. For a while today, we had about a 30% probability of a quarter point ease. That's now moved to around 24%. It's been bouncing around a bit. If you look at the March 18th meeting, that's also hovering around a 25% probability of a quarter point cut. But basically, the real issue for 2026 is how much the market's going to pull out on the easing mentality as we continue to get data that certainly doesn't look like the labor market is dying a quick death. And with terms of inflation, not a lot's changed in the last 16 months. It's sticky, but it doesn't seem to be going down closer to the Fed's target.
Rick is the only person I listen to on CNBC. Only person. So we're pumping a little bit now, making a reaction high now on the 2-minute SPX. And let's see what crypto is doing. Yeah, crypto is coming back as well. So basically nothing. SPX is just pumping down. Yeah, new reaction high, 68.67. Yeah, I wouldn't be surprised if we settled exactly about 68.50 range. I don't know what NBC is today, but, you know, big cloud of dust and nothing has happened. Okay, so okay, now let's answer some questions and we'll go have a cup of coffee. And then if you guys want to listen, I'll put on Jay Powell's thing, but everybody can listen everywhere. So concerned there may be a global demand shift for U.S. Treasuries occurring. It already is happening. You know, look at China, who used to be the top U.S. Treasury holder. Now Japan is. They may be forced to sell. Look, Japan's thing is a really serious thing. People are not paying too much attention to it. There's some smart people on X actually talking about it. Japan owns 1.2 trillion of U.S. Treasuries. If they decide to patriate funds back to Japan to save their own ass, start selling treasuries, that could put a higher push on interest rates in the U.S. for a short period of time. A lot of countries are divesting away from treasuries and buying gold. It's pretty obvious. China's doing it massively. A lot of European countries, Turkey's doing it. Look, if you play the treasury game, you're going to lose. I mean, you're going to get 4%, but then the dollar is losing 6, 7, 5, 8% every year. So, you know, a lot of countries are, you know, I mean, look, dollar's only advantage is being the reserve currency of the world, and that's not going to change forever, or not in my lifetime anyway. So, which is who's going to replace the dollar? Yuan? Japanese yen? No. Will it be euro? No. So, yeah, I mean, that concern is valid, but that's been going on. And look, we're the buyer of last resort, man. We'll just turn the printers on and we'll just buy the shit. That's it. That's all we have to do. And this guy came back from the dead. BMNU is at 1140. Yeah, cool. I mean, I'll get called away. I get called away. It's a beautiful trade, beautiful 30+% trade for a month. Yeah. Speculations used maybe another credit. Yeah, those don't matter. You know, it's short term. All these things are short term. Like, you have to understand the bigger picture here. I appreciate the comment, by the way, Sentinel One Bull. You have to understand my opinion on this in private circles, and once I started the YouTube channel, has been that we cannot stop the music. We cannot afford to stop the music now. It's too late to get back to fiscal responsibility. We're going to keep printing. We're going to keep spending. They're going to keep debasing the US dollar. They're going to keep devaluing the US dollar. People don't understand what's going on. That's why you have to invest long periods of time. Yes, we may have little short, clicks here and there, sell-offs like April or Japanese yen carry trade crisis last August. Last August it was, right? There may be another one in 2026 coming up. Look, all I'm saying is there's a reason the top 10% in this country owns 87% of the assets. Okay? And if you're in the top 10%, you're doing great. Everybody else, the bottom 50% owns 1% of the assets in this country. So that's why we have the wealth gap going on. You have to look a little bit more internally. Over long periods of time, accumulation of hard assets is the way to go. There's no other way to save your ass otherwise. At least keep pace with what's going on, because what the government's telling you is a false narrative. I'm not going to call it a lie. It's a false narrative. Not everything is fine. Not everybody's doing well. And my concern actually is a political one, that we may get the socialist shift going on. I mean, New York City is, experimenting with the socialist. I'm not going to call anything else. Miami did the same thing. We have elections, midterm elections coming up. We need to do stuff for the average American, right? And I don't think we are. I think the average American is suffering pretty badly, actually, because their paychecks have not kept pace with him, although incomes have gone up in the country, but it has not kept pace with the true rate of inflation in this country. Adjusted the inflation, incomes are down in this country, man. True inflation. Government can say 2.5%. It's not 2.5%. It's a lie. Well, it's a stretched truth, let's say. So I'm not concerned about much. What I'm concerned about, my top concern, carry trade, right? That's top concern. Not because the carry trade is going to be unwound by everybody, but if Japan decides to repatriate all the trillions of dollars invested in the U.S., even to a certain point, it's going to be it's going to create a lot of problems, and then dominoes will start falling when it comes to that. And then the liquidity, additional liquidity due to the carry trade has stopped now. You can't do a carry trade now because our rates are being pushed down. Japanese rates are getting skyrocketing. You can't go borrow at 2 and invest at 3 now because you have massive currency risk. So that game is over. Will it unwind is the question, because when it unwound in August, we know what happened. 20% real haircut real quick, right? So, but the signs will be there. We'll see what happens. What else is going on? Not much. I put the link up. Let me put the link up again if anybody wants to show up. Here's the link. There it is. What else? Let's see what the market's doing. It's just not doing much, honestly. I mean, we did take up, and we're holding up there for now. There it is. That's the 2-minute chart. This is the 1 year, 1 day on SPX. Literally, we're 1% from the highs. Triple Q. Again, 1% from 2%, maybe from the highs. I'm watching some stocks. Ethereum is nowhere. Let's see where my positions are real quick. ASST nothing. 1140 now on BMNU. Holy smokes. Big move. BMNR must be over 40 then. Okay, cool. We'll sub some more strangles then. BMNR must be definitely over 40. Yeah, 40.61. Okay, cool. It may save your ass. The guy stuck with the puts. BZAI nowhere. I have some calls to sell on NIA. SBET 1198. Okay, cool. Those 220 calls are going to print if SBET takes a move next 30 days, 20 days. And because of Ethereum, obviously. My long-term port is beating my trading account this year. It's sad to say, but it is. I'm long Google. Beautiful, beautiful buy there. We got lucky with the thing. I'm long UPS. I bought it about 10 days ago. I'm up on the stock now, handsomely. I'm long Lulu. I'm up on this position as well. The only one I'm done is Kava, but I'm very close to break even. Yeah, no, I'm down about 7-8% on Kava. Not 59. Oh, no, about 10-11%. But everything else is pumping. It's doing well. Unity, I doubled and sold. That's making a new high now. Gosh, beautiful. So yeah, I have a video coming out about talking about independence, the Fed independence. Again, don't fight the Fed, right? I mean, what they said they're buying that QE light up to 3-year notes is interesting to me. They're already kind of hinting. I go, hey, we're here. If the Japanese yen carry trade shit goes sideways, no worries, we're here. I'm like, okay, cool. Cool. All right, folks. Let's see. Oh, let's go to Dan. Let's see if Pal. When is Pal going to be on? 11:30. It's 11:30. You guys can watch it on your own. But so at the moment, that's where we are. What else am I watching? Oh, actually, I was talking to my group today. I'm watching Open very closely. I think we're going to. I have to trade. I don't like the company fundamentally, but we have to trade it. This is the daily chart. Yeah, this is just winding up. This is going to be a massive push up on this thing. So, yeah. Yeah, I'm long this one as well, SOLT. Okay. Yeah, Open, I'm watching. A couple other names. Pivoting to 52-week high list, just trading those. I'm going to put out a very interesting video on Monday. Please go check it out. It's about win rates, how you can go actually from 100,000 or any, 10x your account by having 50% win rate. It comes by just risk and money management. And then, yeah, Open is something that I have a close eye on. What else am I watching? Do you have any questions? Put them up. What else am I watching today? Or my watch list anyway. Ethereum, by the way, for all the BMNR folks, we're at a very critical moment. We're at the 200 EMA. The death cross did not happen yet because we bounced pretty sharply. What I'm looking for is that we're above the 200 EMA. We're in resistance here, and a couple days sideways will be fine. If not, no big deal. Excuse me. If we do take out the 50 EMA and still in a downtrend, short-term downtrend that's broken now, this is a chopsticks talk, folks. It is what it is. A lot of people do it. This is IBIT, which is iShares Bitcoin ETF. That's actually acting a little bit weaker. So 200 EMA, and that is much higher than where it's at. So it's about 105,000 actually on Bitcoin. This is MSTR, where a lot of people are stuck. I mean, yeah, disaster. But SBET, okay. Bloom Energy. Yeah, all these energy stocks are ENs and SB, EOSC, NBIS. They're just kind of consolidating. NVIDIA, not much is going on there. Just consolidating. Palantir, decent move up today. Hood is back at top of the range. Palantir looks like it's going to the top of the range. I mean, they're in trading range. Pretty wide, though. SoFi, same thing. Looks like it's in a trading range. So, yeah. I mean, just pick your spots and do the best you can, man. And what else am I looking at? Carvana, I can't believe that stock. I bought that stock at 18, about 2 years and change ago. Held it for 1 year, 5 months. Sold it at 90. It's 400 and what? I can't believe that stock is worth more than Ford. They sell, oh my God. Yeah, they put it in the S&P 500. They sell cars out of vending machines. Company's worth $100 billion, folks. Interesting. Very interesting. Super duper interesting. And now we're selling. I'll bet you we'll just settle right at 68.50. Honestly. Like, what else? What else is going on? I like lemonade a lot. A lot. Not to drink lemonade. The stock lemonade. Beautiful chart. Uber is taking a massive dump today. I don't know why. I think it's the Waymo announced they're doing 450,000 trips a week now. Is Uber gonna kill? Is Waymo gonna kill Uber? I don't know. Big move down today on pretty decent volume. Some of the space stocks were doing well. ASTS, yeah. Rocket Lab. I mean, fundamentally, these stocks are not worth $1 they're printed on, but they're just nice move on Rocket Lab. Nice move on ASTS. Nice move on Lunar. Pretty big percentage moves, actually. So Bitcoin is up today, and MicroStrategy is down today. Strategy is down today. Unreal. BMNU 1150. Okay, cool. Take my shares. Take my shares. And then we'll redo it again. What else is there? Please take my shares. It turned into a beautiful trade, really. Oscar Health down $1. People love these stocks on Twitter. There's 10,000 stocks and people are stuck on 5 stocks. They're stuck on HIMS. There it is. Why would I want any of that? I don't want any piece of that. Although open, I'm going to trade the bejesus out of it when it does break out. What else? Yeah, not much going on. Back to SPX. Yeah, we're green for the day. We're holding too. It's kind of a little holding pattern. I bet you not much happens. No, I bet you not much happens, folks. Let's see if Powell is on. Oh, all the talking heads on CNBC. I can't stand these people, man. I think it's at 11:30. Oh, now we're coming back down.
Feels like they brought the first aid kit out. We haven't seen the wound yet, so maybe this job situation is going to decrease and get worse. But right now, the economy is strong. We're seeing
economy is strong. Here's a dickhead on CNBC. Profits are, but talk to the average American, you puckerhead. Very surprising. Economy is very strong. We have big companies laying off tens of thousands of people right before Christmas, but economy is very strong. Fuck these CNBC talking heads. That's why they don't deserve my attention. Couldn't care less about these people. Economy is great. Like, huh? I mean, my economy is great. I have no complaints. But I feel for the average folk who are suffering out there. I have 25 calls for sale. Are you guys going to take it? Should I cancel it? No. Then I'll be in like a vertical spread. Yeah, I'll just keep the. Yeah, you know what? Let me cancel it. Let's see. ASST back to $1. I don't know. That's my lotto ticket. Hopefully it'll hit. If it doesn't, it doesn't. Yeah, my puts are going down. BMNU. At this point, 11s are going to get taken away as well. Beautiful. Cool. 8, 9s, 10s, 11s, and short 8 puts. Okay. Take it away. Have a nice day. Average cost 778, 8, 9, 10, 11. 10.5 average sale plus $1, 11.5, 4 points. 3,500 shares plus the strangles. You know, I was short strangles. I covered them yesterday with profit. That's like a $15,000 trade. I'll take it. I'll take it. Yeah. All right. I'll be back on Friday, folks. Let's see what happens. Now, I say we're back to 68.50, 68.40. Perfect. Big cloud of dust. Just like running the football on a Fed day. Nothing happens. The initial shock goes up. Initial shock goes down. Market says, nothing burger. Thank you very much. I'm like, okay, cool. Cool. All right, folks. I'll be back on Friday with Power Hour. Please join me on Friday. Let's see if there's some questions. I'll answer those. Nobody wants to join, huh? Okay. Big believer in the random walk theory. Was in my 20s and 30s. Yeah, I mean, yeah. But I'm going to be 58 in March. And, I mean, look, knock on wood, I've done well. You know, but then, you know, for me, the important thing is share the knowledge, share the experience, share the wealth. It's completely necessary. And I try, right, with my kids and my family and my circle of friends, you know, but then I don't think market is random, honestly, but I think it helps. It helps to understand the next level as opposed to some YOLO traders you see on Robinhood and stuff like that. They're young, you know, they don't know what the fuck they're doing. Hopefully they keep the money and they, you know, accumulate long-term wealth. You know, but yeah, I couldn't emphasize more. You're in charge of your own financial future. Government's not going to help you unless you have rich parents. Nobody else is going to help you. You need to understand what's going on, and you need to act accordingly, and then save your butt from what the government's doing. But you know, I don't know. I'll keep chugging along and pivot a little bit this year, and you know, do the best you can. You're on this planet for 75, 80 years if you're lucky. Why not? Do the best you can, man. Share the knowledge, share the wealth, share the experience. You know, teach people how to fish. Don't give them fish, because all these YOLOers or all these ex-gurus, all they do is bullshit on X. They go, oh, look at me, look at me, look at me. I'm like, okay, you have a Discord you charge for, and then on the first pullback, everybody gets wiped out. I'm like, okay, cool. Well, my point in all this is experience is invaluable, and I'm trying to share it and educate and inform. And, you know, if this is the platform to do it on, great. If you guys support me, great. So I appreciate a thumbs up if you guys enjoyed it. So one last look. Not much really has happened. Market took a leg up, market took a leg down, and we're probably going to end up exactly where we started from. All right. Let's take a look, and we'll end there. I'll be back on Friday with Power Hour. Please join me, 10 a.m. Pacific, 1 p.m. Eastern. And yeah, exactly where, I mean, literally exactly where the market's exactly where the decision came out at. Nothing, you know? Yeah, not much. So yeah, we'll see how they end up at the end of the day. Market was so much in sentiment. Absolutely, yeah. Yeah, you have to pivot. You have to pivot. You have to amend. You have to adjust them. Because if I paid attention to the same stuff I was paying attention to when I was on the desk, I'd be broke. You have to adjust. Doesn't mean you have to be YOLO, HODL, FOMO, all that bullshit that they brought around since 2020, the pandemic. You know, some old stuff still works. Actually, you know, speed has changed. You know, everything has changed, right? In my day, we used to look at PEs and things. Nobody looks at PEs anymore. Although I still do believe fundamentals run the show. Ultimately, everything will revert back to fundamentals, but momentum is very powerful. The Fed's effect on markets is very powerful. What they can do with monetary, you know, policy is very powerful. How they can unlimited supply of dollars they can print and push is extremely powerful. None of those existed when I was on the desk. It existed, but not to this degree. Everything changed since 2008. Last 17 years, it feels like a simulation more than fair or price discovery. You know, there's a Fed put. When things get ugly, there's always, you know, everybody knows they're always going to be there saving people who shouldn't be saved. Look, things have changed, but you have to change with the times as well. You can't just be going like, this is bad, this is bad, this is bad. No, there's some good things happening in the US. You know, I disagree with some of the stuff that's going on, specifically on fiscal policy end, but, you know, because I don't want my kids to be burdened with 50 trillion in debt or whatever it's going to be in another. I think debt's going up $1 trillion every 100 days. So, you know, probably by the end of March will be a 40 trillion. And in order to, because the interest rate cost on that is 1.3 trillion this year, next year 1.56 trillion. $1.6 trillion interest around the globe, or whoever is getting this interest. These are IOUs, right? That's a lot. That's twice as large as our defense budget. That's larger than Social Security. That's another problem. Unfunded liabilities. I mean, look, there's a lot of problems, but then all we do is kick the can down the road. And I've accepted that last 10 years. That's why I've done so well. I go like, what do? We buy gold, we buy Bitcoin, we buy stocks, we just buy just to keep pace with what's going on. Otherwise, you're going to be left behind. And that's what's happened in the country. Because of lack of financial literacy, people are left behind. And now they step in and the market tanks. They just get horrible experience and they quit. You can't. You just got to invest and you got to save your ass, bro. Influences, yeah. Oh, yeah. No, we had good info. Don't get me wrong. You know, we had our Bloomberg terminals and shit, but yeah, well, when it's funny thing is I used to get the, this is how far back I go, but look where we are now. You know, going back from starting from the pits, those were the best days, right? Because you feel the energy and you feel what's going on. You feel the sell-off, you feel the bottom, you feel other people's agony, you know, all the getting stops and whatever. But then we moved to the desk. You know, once we went to decimalization and once we went to screen trading, you know, everything changed. But then I used to get the Investor Business Daily, the blue book and the green book, New York Stock Exchange book, and the NASDAQ book. And then I used to flip charts. It was like maybe like this big. And then I would pick my charts for the week and my watch list. Now I do that in literally 5 minutes on a computer. It used to take me hours. So I have more time to do other things. So, you know, technology has helped and hurt. But I do believe for the retail investor, average retail investor, technology has helped because you can buy things at a better price and sell things at a better price just because things get, the pendulum swings too far one way or another. And you can take advantage of those things. So, yeah, things have changed. But look, you have to be like a chameleon. You have to accept change. You have to have an open mind when you're, you know, some people only do fundamental analysis. I do both, but you have to accept that things have changed. You know, in my day, price to sales, what the heck was that? Well, now everything is price to sales because all these high-tech companies, right, growth at any cost, all these things. You know, I mean, if Palantir was around in my day, we wouldn't even look at it twice. But look at it now, right? So all I'm saying is you have to adapt, you have to adjust, you have to change, you have to have an open mind and do well. And pass the knowledge along because I think, you know, I see these you know, I'm pretty active on X, and I see these gurus, and like, I have no fucking idea. They haven't been in a bear market, and maybe we will never be in a bear market. I think never is too long. I'm sure we'll be at some point in a protracted bear market, but luckily they last about 18 to 20 months on average. It's brutal, you know, the drawdowns are brutal, but then nobody says you cannot short if you know how to do, if you have the education and knowledge. You know, because all these fools are selling puts now and saying, oh, I collected a few pennies in front of the bulldozer on a bear market. They're all going to be disappearing. All going to blow their accounts. So my point is just be careful. There's risk in everything. Understand risk. Understand risk. There's risk in everything, folks. Anyway, so I think I don't want to overstay my welcome. I'm going to go have a cup of coffee, finish the day off. Seems like account's green today. Maybe I should. I'm working on a proper green hat, black hat, and a red hat. So when the market's down, I'm going to wear a red hat when I'm doing live streams. When it's up, green hat. I'm trying to come up with a design. Or should it just be blank? I don't know. Right? I don't know. Or should it have my logo? Maybe I'll put my logo up there. An inconspicuous logo. Nobody understands what the heck it is. I'll figure it out. But I'm not selling merch or anything. I just want hats for myself. I like wearing hats because I don't have much hair left. This market has made me pull my hair out. This market has made me pull my hair out. But long story short, stay healthy. Understand what you're stepping into. Buyer beware. And next Monday's video is an eye-opener for a lot of these FinTwits out there. Because there was some jackass that's put up, oh, if you sell cash secure puts, there's 90% win rate if you do it on red days. I go, that's your metric? You sell cash secure puts on red days? Well, what happened to you if you sold puts on Oracle? I mean, it's a huge company, right? 350 to 200. What happened on Meta? Like 750 to 600. What are those puts? It's just this bunch of fools, man. Again, he goes 90% win rate. I go, why the F are you tweeting if you're at 90% win rate? Oh, that's because you're taking in 50 cents, 80 cents, $1 at a time. And with one of those whooshes, when a stock craters by 30% in a single day after earnings, all that money is gone and your account will be gone, most likely. Who gives a rat's ass about win rate? I could not care less about win rate whatsoever. But then the video will come out. It's proof in there. You know, math doesn't lie, folks. Please go check that out on Monday. How can you go 10x on your account with a 50% win rate? Is it possible? I don't know. You guys have to watch the video. Anyway, I'll see you guys on Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Please put a thumbs up. Please share. If you're not subscribed, subscribe. Turn on notifications so you get all the notifications for videos and live streams. I am on X. The information is on the show notes. Please go subscribe to my free, absolutely free newsletter. Please share that newsletter. Amazing, amazing, amazing information already in there. Let's improve financial literacy. Help me do it. So I want to do it. I want to do my best to improve financial literacy in this country. I don't want anybody to be left behind. I want to close the wealth gap, not by raising taxes or anything like that. I just want people to understand what the rich are doing so that you can join them, Because a lot of people think investing takes a lot of money. It doesn't. It doesn't. It takes $5 a day, $10 a day. If you're young especially, let the power of compounding work for you, and you'll be so much better off than your neighbor who does not understand or intimidated by investing. Anyway, see you guys on Friday, Power Hour. Much love. We're going to end the live stream at some point. Let's end it.